The Monetary Policy Committee of the Bank of Ghana cited threats to inflation rate and economic growth for keeping its policy rate unchanged. Now, as we've been reporting, the Bank of Ghana announced that it will keep the rate at 16%. Governor of the Central Bank, Dr. Addison, noted that they would review the rate as and when it matters.
Bank of Ghana will be working closely with banks to ensure that banks do not pass on their operational inefficiencies and overhead costs to their clients. To do this, steps will be taken to align compensation with overall bank performance by linking it to clear parameters, including the quality of a bank's assets. Bank of Ghana will scrutinize compensation policies for chief executive officers and key management personnel, as well as board of directors of universal banks. To ensure transparency, banks will be required to publish value-added statements disclosing details of the compensation packages of key management personnel and board of directors separately from the total employee compensation. To further deepen transparency in the determination of lending rates, banks will be required to develop and publish a clear framework on the risk premium build-up that impacts individual borrowers' credit profiles. This is expected to provide borrowers with a more informed basis for negotiating lending rates with their banks and enhance transparency in the credit delivery process, as well as promote responsible credit behavior from borrowers. In an increasingly digitized environment, the Bank of Ghana has evaluated its role in a digital economy. The central bank is in discussion with stakeholders to explore a pilot project.
Governor of the Central Bank, Dr. Addison, speaking there. So the Bank of Ghana is, for a start, exploring a number of new prudential and market conduct regulatory measures to help foster more competition in the banking sector and in the process help lower lending rates. Philip Namfuri, my favorite analyst, is in the studio with someone on this. So what are the measures that the Central Bank is introducing, Philip?
So our first question, why do we have high lending rates? Why credit growth has picked up in the economy, but not too much to the level that the Bank of Ghana deems fit? And thirdly, the transmission mechanism, the effect of policy rates on lending rates in the economy is not really being felt. So Bank of Ghana is putting together a number of measures, 4 of them. One is what you mentioned, or what we put in the report, the enterprise credit scheme, where they'll set aside 2% of the primary reserves of commercial banks. Commercial banks put away 10% of their deposits and give it to the Bank of Ghana anytime you deposit. And so they're taking 2% out of that, setting it aside. And if the banks would demand it, and then to go into the enterprise credit scheme. The other one is also what we call the minimum loan to deposit ratio. So what does this mean? For every deposit that a bank receives, a certain number goes out as a loan. Nigeria tried this with, I think, about 65% loan to deposit ratio, which means that for every 100 naira received, 65, I beg your pardon, should go out as a loan. And this is what Bank of Ghana is trying to explore. And they've stated in there that they want to exploit after consultations with the Ghana Association of Bankers, because there are implications for this. If you look at data from the Bank of Ghana Banking Sector Report, our loan to deposit ratio over a 4-year period or 3-year period, in August 2016, it was 76.6%. So let's say for every 100 Ghana cedi received as deposit, 76 Ghana cedis goes out, all things being equal. In August 2017, it went down to 69.5%. In August 2018, it went further down to even 49.9%. And in August 2019, it's picked up to 51.1%. So you see that over the course of this period, it's been coming down, which means that banks are giving less out as loans from the deposits. But now it's picking up. So that's one of the measures they want to explore. But there are implications for it. Nigeria has tried it. They even sanctioned some banks for failing to meet it. It's very dicey. Essentially, in literal or simple terms, you are forcing banks to lend more than they would want to. There are implications for the economy. I mean, we need the credit growth to stimulate demand and to stimulate demand for goods and services, I beg your pardon. So we need to explore it. Then there's one thing also that came up, the compensation of our board members and the management. Bank of Ghana is looking at tying it to the bank's performance, particularly looking at the bank's assets. So if if you have a high non-performing loan ratio and yet your managers are taking a lot, is there a problem? Bank of Ghana wants to explore some of these new measures. And then the final one is the risk premium build-up. And let me just break that down for you. When they instituted the Ghana reference rate, when you take the Ghana reference rate, you're supposed to add a certain premium. So if Darrow comes to borrow a loan, they evaluate you and say, Darrow's Joy Business Van business is doing this well, doing blah, blah.
Right.
So we need to add something to it. They need to tell us more about how they add that risk premium so that we know how much you are getting on your loan, how much I'm getting, and we make those dynamics.
A quick one before you go. I mean, how effective or efficient are these measures going to be? You talk about the Nigerian situation where there are repercussions for the economy. I mean, how do you expect this to work out, and how do you think the banks are going to react to these measures?
Well, Darrow, I remember the governor said it's early days yet. That's why there are going to be consultations. So they'll need to consult and see what's good for the banks and what's good for the economy, because banks are private entities. They are in it to maximize shareholder value. At the same time, they need to perform their transmission mechanism roles very well, which is through their lending rates and affect the economy. So it will be a balancing act, and they need to explore it to see how best it will help both parties.
Philip Nafuri, thank you very much indeed.